morning, everyone, and welcome back. Nice to see all the faces back again for day two. Yesterday set the scene how the capital is moving, how markets are changing, and why discipline matters more than it used to. Today is about getting more practical. What actually works, what doesn't, and what needs to change as markets and capital evolve. Thank you for being back with us on day two. I hope today's sessions are useful. We'll start with our first panel, the legal backbone of capital, structuring growth in complex markets. Please join me in welcoming Daud bin Farooq, Group Counsel at IFC, and our very own Sally Mousa from Forbes Middle East. Thank you.
Thank you so much, Mark. Good morning, everybody. We need some energy. We need some energy. Good morning, everybody. Yes, I love it. I love it. I love it. We would love everybody to kind of come a little bit, forward. If you are more comfortable, come and be part of the conversation. We are so excited to have you all with us here on day two of the Forbes Middle East Top Advisors and Investor Summit. And I love that we are starting with this particular fireside because it's something that we don't talk about enough. Because for years, capital conversations have focused on speed and scale. Today, of course, capital moves on confidence, and increasingly complex markets, growth isn't just powered by investment alone, but by the legal and the governance frameworks that structure risk, enforce discipline, and signal credibility to investors. And so, of course, behind every institution that can sustainably scale, there is a legal architecture that is doing a lot more than just protecting downside. It is actively enabling growth. And so to explore how law, governance, and structure form the backbone for disciplined capital expansion, I'm so happy to be joined today by Daud bin Farooq from IHC. Daud, at scale, legal is no longer just about risk mitigation. It is really about actively shaping how institutions grow. So for you, what are the non-negotiable legal principles that organizations have to get right if they want to expand confidently while maintaining investor trust?
First of all, good morning, everyone. It's a pleasure to be here. And thank you, Sally, for doing this for us. So, legal regime, works in very interesting ways. Whenever investors, looking to sort of invest in different markets, what they typically want to see is certainty, predictability, how the investment is going to behave. Purely from a legal point of view, the most important thing is how you're structuring a deal, basically. How the deal is structured depends, in which jurisdiction you're investing in, how tax efficient you want the structure to be. The other thing you want to see, how long can the structure survive as well based on the changing of laws all the time. You want to be able to navigate things as well. You want to make sure you have the flexibility of carving out investments at the same time as well. Whether you're doing joint ventures, you're doing co-investments, you want to make sure you have that flexibility at the legal structure. So purely from that point of view, the role has become, quite important over the last decade or so. So it's not just as a back-end function, it also supports a lot of commercial-driven decisions as well at the board level.
And you know this very well, being, of course, part of the legal team of the largest public company here in the UAE. But you're also working across jurisdictions as well. And in those kind of fast-moving, multi-jurisdictional markets, complexity is just part of the game. How does strong legal structuring practically help institutions to really manage risk, to protect capital, and preserve that long-term stability that you were just talking about?
It's a very good question. So I would say the most important thing, when you're doing investment is to how to ring fence that from different sorts of risks. You may be investing in multiple countries at the same time under the same holding structure, but what you want to make sure that you have those legal structures on top of each of those assets, that the liability is ring fenced at that level and it doesn't impact your holding entity at the end. So again, it's easier said than done, but again, in this day and age, considering how diversified portfolios are for investment companies from the UAE or GCC in general, it's a very important decision you have to do. And the more early on you do in the structure, the better, because you should perceive the possible scenarios, what is going to happen to this investment down the road in the 5 years, 10 years. It doesn't have to be a decision just taken based on the facts that are in front of you at that point in time. You have to sort of prepare for worst case scenarios as well. What might be implications due to any government changes, in these jurisdictions, due to any policy or narrative changes as well. So you have to think about the future as well. It's not just about thinking or taking decisions on the current setup.
I don't think we kind of really understand the complexity of the job that you have, Daud, because you're literally looking at, geopolitical risks, geopolitical changes, what is going on there, how is that going to affect capital and investment, how is that going to affect growth, where to go, what to do. And this is all, as you're saying, it has to be long-term. You have to have a long-term view to that. What are the most important things that you feel like, founders don't understand, that business leaders don't understand when it comes to growth in these kind of environments?
So the important thing is that, again, you have to plan for the next 5-10 years. But legal as a function, shouldn't be seen as a burden or just a cost and, at the end of the company. Now it's more of a partner to the commercial, drivers in any setup. Because you're not just planning for the current setup, you're planning for the next 10, 15 years as well. At the same time, you want the leadership to be comfortable, whatever they're investing in, the capital is completely safeguarded. That's very important to give them that sort of comfort, whatever you're trying to do. Secondly, what is important is you have these opportunities within any structure that if you want to bring other partners at any point in time, you want to divest, you have the protection of the legal setups, let's say like someone, a jurisdiction like ADGM. It is comforting for institutional investors to sort of recognize and come into these jurisdictions, and it gives them comfort that their capital is safe when they're investing here.
Having the ecosystem there is absolutely essential to being able to make all of this happen. One of the interesting things that we spoke about backstage is you're talking about looking at all of these things, but one of the most critical aspects is closing the deal and being able to close the deal. Talk to us about the intricacies of that and what are the most important aspects to give investors that confidence to be able to do it?
Sure. So, I'm sure a lot of you, people over here would have done, so many deals in the region, in the UAE. A very important aspect is as soon as you have signed the deal, it's not the deal is done. You still have to close it. So, typically for closing a deal, there are a lot of stuff such as antitrust filings, different change of control consents with the banks, with the lenders, any other CPs that you have identified during the legal process itself. So you have to make sure that you have a dedicated team who's chasing, following up on all of them, because the closing is the main thing in any particular deal. Because if it takes too long, the deal may not be lucrative anymore for the investor as well. So it is very important, to sort of make sure that you have a certain timeline already agreed upon within 3 months, 6 months, that you have to get the deal done.
And this is one of the most interesting aspects as well, because when you're talking about high growth environments, speed is essential in closing the deal and in innovation as well, when you're talking about businesses that are really at the forefront of innovation. But of course, governance and legalities, that demands restraint, that demands just slowing things down a little bit. So how should then legal teams be able to balance that rapid expansion, rapid execution with that institutional discipline without losing momentum, as you're saying there?
So I think that question is probably relevant, in today's day and age. One of the ways of doing it, you have a limited capacity, in terms of physically how many teams, members you can have. But, AI has and tech has evolved so much over the course of last 2-3 years. So you have all sorts of platforms which can not only support, in legal process, but can also make your life efficient. One thing, I do tell, a lot of, young people or investors, whether it's from legal or commercial background, is that, AI is not here to replace it. It's here to make us more efficient. So I think it's very important to understand that perspective as well.
Fantastic, fantastic. We're going to leave it there. Unfortunately, we are out of time. Ladies and gentlemen, please join me in thanking our speaker, Daud Farooq of IHC. Thank you so much. Thank you, Daud.